Hi, welcome back to today's Morning Report on Tuesday, 29th of September with me, Richard Pro Market Analyst at Handtech Markets. Moving on to sterling dollar now, and for the last few days really, sterling has been on the brink of this big range support, 51.70, and it's holding on. It haven't had a closing breakdown. Again, yesterday you did have what was for much of the day actually trading higher. Sort of reached a peak of 52.40, but then fell away again into the close, but still closed just above that support, 51.71. So really is on the brink. But again today, a slight intraday breach, not too much, just by a few pips or so. But again, we're trading higher than that 51.70 level. So you look at these momentum indicators. I mean, see the RSI sort of bottoming to a certain extent, stochastics no longer falling sharply. Is this sort of coming to the end of this selling pressure at the bottom of this range? It's really interesting. Yesterday we didn't have, that was the first time we didn't have a lower low on the daily candle for the first time since in 6 days now. So really interesting that we saw that. So yeah, the pressure is not necessarily, well, I mean, you still got the downside pressure, yes, but it just looks like it sort of is in the process of possibly just stalling, certainly stalling, if not rallying. You've got this downtrend on this chart here that's been broken now. You've also got this bullish divergence on the RSI, which continues to run, actually. So it's interesting that the momentum isn't necessarily as strong with the downside, with the selling pressure, as it was previously, and that's coming around these range lows. So certainly the market is having a really strong think about what it thinks about this this range low, 51.70, whether it wants to break it or not. It hasn't decided yet whether it will be breaking it on a decisive measure. Close below would arguably just open initially that 50.88 key support of that May low, but then you start to sort of drop quite sharply back towards 150 figure, and then below there. So that is the implication of a breakdown of 51.70, but at the moment it's just hanging on, and it's very interesting. Now for a recovery to start taking hold, you need to move certainly above yesterday's high, 52.40. If that were to be seen again, that would be an indication of a turnaround in the sentiment, but you wouldn't really get a move above resistance. You wouldn't really get an improvement in the sentiment of any notable measure until you see a move above that 52 sort of 85, 88 level. So which was that reaction high on Thursday last week. So a couple of levels there for you to work with, but certainly at the moment it's very slight improvement that we've seen in trading today, but still it is on the brink, and it could turn at any stage. But 51.70 remains that big support that is intact for now. So I wish you good luck in your trading, and I'll speak to you later. Thank you.